Hi everyone. Markets did not keep up with that upwards movement like I warned about yesterday. We saw this high, lower high here, retraced to the 200, tried to rally up and then gave it all back and then some here on today's session. So let's take a look at it a little deeper as we head into the weekend. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Moving over to fear and greed ratio, you can see we were at a 50 from a 48, so we did see a very slight tick up even with price action going a little bit lower. Strength into extreme fear, breadth into extreme fear. Definitely have been seeing those tick down. Put call ratio going higher. And this is a 5-day rolling average, which is probably why it's been staying lower even with price action getting a little bit choppy. And then volatility kind of choppy in that 14.2 area. Safe haven demand spiking back up into greed. Same with junk bonds showing a little bit of greed there as well. Moving over to max pain, you can see 600 and 606 were the levels. We ended up finishing between those two. Total options about 1 million, put call ratio, saying that this could have gone a little bit lower, and I kind of expected maybe 602, 603 somewhere in here, but we ended up holding up fairly well at 604. And then moving over to the charts here just for a little bit, like we talked about, big move down on the open, took out yesterday's low. You can see negative on the day, just 0.02 on the closing price because we did see that very slight rally into the end of the session, but selling off here a little bit more after hours. First candle down was about 50 cents. We've retraced a little bit of that, but we're below all the EMAs and SMAs now on the hourly chart. I still think this is going to go back down to that 21 EMA, down at 599.50, 599.64 is my level. VWAP down here as well. Momentum still bearish. Everything says this is still a topping pattern in my opinion here for the S&Ps. And then looking at that 4-hour chart on the Tasty charts here just for a moment, you can see we almost touched that ATR trailing stop at 602.44. The low for the day was 602.81, so just barely missed it. Volume actually pretty decent here on the day in that selling price action. Momentum stepping back to bearish here. You can see ATR bands are basically flat, but this lowest band is starting to trend lower. It seems like that 144 EMA is really the target, and that is currently sitting at 598.50, so about $1 lower than the target we just talked about on the previous charts. It's still technically bullish, but if you look at it on the hourly chart, we were bearish all day, almost hit the ATR trailing stop and then sold off. And we continue to be bearish here, almost hit the lower band. Short-term lower band would be 602.07. Moving over to the NASDAQ, you can see we got a gap up and doji off the back of that Broadcom earnings, which was very, very good. If we did not get that earnings, I think this would have been in basically the same position as what we saw on the SPY charts, but because of that, we got the big gap up, and you can see just how much this is selling after hours. So we closed at 530.50, we're already down here to 529.68, and it continues to sell here after hours. I really think this was just a product of that Broadcom earnings, and you can see this is actually the 5-minute chart here. Jumping that to the hourly, you can see we came up, hit the trend, huge down candle, 0.88, tried to retrace some of that, ended up closing below the 530 level, momentum bearish, RSI bearish. I think this is probably going to sell a little bit more. Looks like consolidation for sure. Could not hold those highs, back below these highs from the Wednesday session. So we'll see how it plays out. Right now, momentum still technically a little bit bullish, but again, it just feels like markets want to go lower. And then moving over to the 4-hour chart on the Tasty charts for the NASDAQ, you can see we hit that upper band, immediately pulled back into the mid-range below the 8, tried to get back above it and then could not. We're right here at that 8 at 529.08, just barely above it in the after hours. Still bullish condition. Obviously, this looks much better than the SPY because of that earnings. And then looking at the hourly chart here, you can see really, really choppy. So we were in bearish conditions. We got the pop. Then we were in bullish for one candle, immediately flipped back to bearish on that next candle, and we are now still in bearish conditions as we continue to sell into the after hours. At best, this is consolidation. At worst, this is a topping pattern. And again, we just could not hold any of those gains as we got pretty extended to the upside quickly and gave it all back. And then looking here at the Russell and the Dow, again, continuing to go down. This is more what I expected. 0.69 on the Russell. The Dow was down 0.2. That makes 7 trading days in a row straight down for the Dow. Not super common. Broke that level yesterday, continuing lower, down more after hours. Still expecting it to get to this trend here at the 434.30 area. My level, 432.78, 55 EMA in there as well, 432.93 as this continues to trend up into my zone. Momentum very bearish. RSI very bearish. Same thing here on the Russell. It did hit my level. It did catch a little bit of a bounce from there. I dipped my toes in at the 232 level. I still think it might go a little bit lower here, but if it breaks this level here, then I will be out of that position. I'll show that position obviously at the end. But for now, seeing if this support holds, it's been a pretty decent sell-off. The high here was 244.98. And we're already back down into the 231 area. So top to bottom on that move is about 5.25%. We'll see if it has any more to the downside. Once this broke, we should have expected a little bit more, and that's what we've been talking about. Moving over to AMD, I got asked about AMD real briefly. You can see this structure is still quite bearish. You can see very consistent downtrend with lower highs and lower lows. And this seems like another lower low here. It is kind of critical back down to almost this low from the 5 August candle, but that was a gap down and rally. So I kind of throw that out. In terms of levels, I have 124.40. We'll see if it gets to there and holds. Didn't quite touch it on today's session. Momentum and volume both still very, very bearish, but this is getting pretty oversold on the medium time frames after a pretty monumental run from about 90 all the way up to $220, and it's almost round trip that all the way down to 126. Realistically, I think this is probably going to pull back down to that 124 level, maybe 118, we'll see. But for right now, I would stay out of this. It still looks bearish to me. I would need to see a little bit more of a solid base. And really right now, even if we did see a rally like this, I would expect it to be met with sellers. So for right now, AMD still looks bearish to me. Moving over to Broadcom just for a moment, just to show that ridiculous gain there, 24%. And some of that even was during the session. You can see during the session, it had a rally of about 5%. So big move there. Momentum super bullish, RSI super bought, huge volume. Everything makes sense as you would expect. It's pretty extended up above this trend line. Every time we get above that trend line for any length of time, you do see pullbacks. So do keep that in mind. Been fairly flat for a while. Got into this price range in June, and now we've broken above it mid-December. So we'll see if it has more in it. It's a big catalyst, but this is really what drove the NASDAQ higher in my opinion. Otherwise, looking at the major stocks, Apple basically flat, up 17 cents. Microsoft down about 0.5%. Momentum on both of these continues to roll to bearish. RSIs continue to roll to bearish, coming off of extreme overextension. We've been saying it for a while. We think this is probably culminated. This is definitely not so great here on Microsoft. Gap up, big wick rejection, gap down. Continuing to sell. Looks very bearish there. Apple continues to hold up, but selling a little bit after hours. Moving over to Tesla and NVIDIA. Tesla continues to be an absolute monster. 4 1/3% higher on the day. All-time high, still price discovery. Closed on the high, still crazy there. And then looking at NVIDIA, down 2 1/4%. Continues to sell like we expected it would. Still looking for that 130.35 level, falling just a smidgen after hours. Momentum bearish, RSI bearish. You can also see a little bit of ramping on the volume there as well. Pretty much right at that neckline, getting a touch of that neckline again, 132.50 or so. Expecting this to continue lower to that 144, down at 125.78. Moving over to staples and discretionaries, you can see staples selling off a little bit more, but ended up gapping up to nearly unchanged on the day. You can see that after hours 82.23, which is basically the same as what we saw on the fall. So basically flat there. Momentum and RSI still bearish, still looks like a bull flag to me. And then you can see discretionary slightly positive. Again, this is getting carried by Tesla in my opinion, but we'll see how it plays out. We'll see if it can continue to keep that momentum going higher. Right now, momentum stepping to bearish slightly, RSI still super overbought. Again, could be a topping pattern. It's not making new highs relative to these last couple days, so we'll see how it plays out. Moving over to Breadth. Breadth finally hit those critical levels we've been talking about. So Breadth hit 28.21 on the 20-day, below this previous low. So again, markets are definitely showing weakness underneath the hood, even if the price action is not really reflecting that quite yet. I guess we've really seen it on the Russell and the Dow, but the SPY and the NASDAQ have not gone with it really. But definitely continues to look weak here, and then 50-day continuing to do the same. Big wick to the trend line, ended up closing right on top of it. So that trend line continues to be important here over the medium term. Definitely an interesting one. Closed at it, huge wick below this previous low. Momentum still bearish, almost oversold. Maybe we get one more wick lower back to this low from the beginning of August time frame, but this is getting into some critical levels. Maybe we touch that 40 level. Still remains to be seen, but this has been a big fall off. The top was around 70 and now we're back into the 40s. Moving over to the dollar, slightly negative on the day, just 6 cents, so nothing crazy. You can see RSI breaking down, momentum slightly bearish there on the hourly chart. We did end up closing above the level again, same as yesterday, so not really a reversal. It is an inside candle, maybe that's showing a little bit of bearishness, but Really, the momentum is still okay. RSI is still kind of neutral there, but above the SMA, so still looks okay to the upside. I still think this might be a bit of a topping pattern, looking for a retest of that 55, but so far we have not seen that breakdown. Moving over to bonds, terrible day here for bonds, 0.3% on high yields, breaking below that 96.50 level. We said we were probably going to touch that today, and we did. Momentum bearish, RSI bearish, volume ramping on that selling action. So see where it goes. 96.20 is probably the next zone. This kind of lows here, and then the 144 EMA there at 95.92. And then looking at TLT, you can see big selling action there as well, another 1% down. We're back into this consolidation low. So now, are we going to get the double bottom here? Certainly remains to be seen. It's had 3 massive down candles in a row, leaving some gaps behind, about 4 gaps here. So really 5 if you go back here to the 6th. So big gaps in a row. Waiting to see if we get a little bit of a bounce from this consolidation. You can see after hours it's bouncing slightly, but momentum still bearish, RSI still bearish. I still like this zone as a medium-term buying area. Maybe it pulls back into here around the 88 area. I don't think we're going to go all the way back down to the 82, 83 area, but that's just my perspective. We'll see how it plays out. Critical zone here. Moving over to my accounts, I traded absolutely horrifically, which is super upsetting. I was probably watching it too much, trying to make too many adjustments. You can see far too many day trades there, 8 on the counter, 9 really on the day. Super upsetting. Definitely shouldn't have been trading that much. Especially with the kind of price action we were seeing, it was relatively sideways action. Pretty big swings in both directions, but we didn't really get a change after the gap up. Either way, kind of in a weird position here. 520 for the 7 days from now on the 20th for $10 credit. Basically closed at the max profit, but you can see we're already down about $1 after hours. We'll see if markets continue to move with that kind of price action. If they do, I have tons of protection, about 2% of protection over the next 7 days, which is really 5 trading days from now, 7 days till expiration if you factor out the weekend there. And then you can see I stepped in on the Russell at that 232 level for 69 cents for the Monday session. Small profits there, seemed like a good opportunity. So at least I did that right. I took that Russell position off as we headed into the session, and then I did jump back in at a little bit better price action there. So we'll see. Traded the Russell well. Qs, not so great. Let me know down in the comment section what you think of the charts or the kind of price action that we're seeing. Will the NASDAQ continue to stay positive despite the fact that everything else is selling off, or will the NASDAQ start to get pulled down with it? Like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.